Internal Revenue Service IRS tax news. IRS, 3 new credits are available to many businesses hit by COVID-19. IR 2020-89, May 7th, 2020, Washington. The Internal Revenue Service today reminds employers affected by COVID-19 about 3 important new credits available to them. Employee Retention Credit. The Employee Retention Credit is designed to encourage businesses to keep employees on their payroll. The refundable tax credit is 50% of up to $10,000 in wages paid by the eligible employer whose business has been financially impacted by COVID-19. The credit is available to all employers regardless of size, including tax-exempt organizations. There are only 2 exceptions: state and local governments and their instrumentalities, and small businesses who take small business loans. Qualifying employers must fall into one of 2 categories. 1, the employer's business is fully or partially suspended by the government order due to COVID-19 during the calendar quarter. 2, the employer's gross receipts are below 50% of the comparable quarter in 2019. Once the employer's gross receipts go above 80% of the comparable quarter in 2019, they no longer qualify after the end of that quarter. Employers will calculate these measures each calendar quarter. Paid sick leave credit and family leave credit. The paid sick leave credit is designed to allow businesses to get a credit for an employee who is unable to work, including telework, because of the coronavirus quarantine or self-quarantine, or has coronavirus symptoms and is seeking a medical diagnosis. Those employees are entitled to paid sick leave for up to 10 days, up to 80 hours, at the employer's regular rate of pay up to $511 per day and $5,110 in total. The employer can also receive the credit for employees who are unable to work due to caring for someone with coronavirus or caring for a child because the child's school or place of care is closed or the paid child care provider is unavailable due to coronavirus. Those employees are entitled to paid sick leave for up to 2 weeks, up to 80 hours, at 2/3 the employee's regular rate of pay, or up to $200 per day and $2,000 in total. Employees are also entitled to paid family leave and medical leave equal to 2/3 of the employee's regular pay, up to $200 per day and $10,000 in total. Up to 10 weeks of qualifying leave can be counted toward the family leave credit. Employers can be immediately reimbursed for the credit by reducing their required deposits for payroll taxes that have been withheld from the employee's wages by the amount of the credit. So in other words, when you're thinking about funding this credit note, you're withholding money for the payroll taxes. Typically, you have to give those payroll taxes in. So instead of basically, in other words, paying the payroll taxes and then getting the credit, you may be able to net that process out by not paying the payroll taxes in the first place and then reporting this on the quarterlies, the 941s. Back to the text. Eligible employers are entitled to immediately receive a credit in the full amount of the required sick leave and family leave, plus related health plan expenses and the employer's share of Medicare tax on the leave for the period of April 1st, 2020 through December 31st, 2020. The refundable credit is applied against certain employment taxes on the wages paid to all employees. How will employers receive the credit? Employers can be immediately reimbursed for the credit by reducing their required deposits of payroll taxes that have been withheld from employees' wages by the amount of the credit. So note, again, that one of the major components here is that typically you have employees, you withhold withholdings, federal income tax, Social Security, Medicare, then you pay those and any other kind of withholdings you had to the organizations involved, including typically the IRS for taxes. They're saying here, of course, that if you pay that and then you qualify for a credit, what would happen is you would pay that out and then they would give you the credit back. But you can kind of skip that step, hopefully, the plan is, by basically not paying in the first place and then reporting the fact that the credit should net it out on, and you can report that typically on the tax returns, on the quarterlies, on the 941. So hopefully the money can be there earlier. The tax credit can actually get there through not paying the withholding and then reporting the fact that you didn't pay the withholding due to the fact that you have a qualifying credit. That's going to be the idea back to the text. Eligible employers will report their total qualified wages and the related health insurance costs for each quarter on their quarterly employment tax returns or Form 941, beginning with the second quarter. If the employer's employment tax deposits are not sufficient to cover the credit, the employer may receive an advance payment from the IRS by submitting Form 7200 advance payment of employer credits due to COVID-19. So now you're talking about a situation, well, okay, that's great, but what if my deposits, what if basically the withholdings that I would typically make to the IRS that I'm now using for credits is not enough? Well, then you can say then you could use this form to get the advance payment of employer credits. There's a link to that form here. There'll be a link to this in the description. The eligible employers can also request an advance of the employee retention credit by submitting Form 7200. The IRS has also posted employee retention credit frequently asked questions, or FAQs. You can find those here. There's a link to that. And paid family leave, sick leave FAQs. There's a link to that, so you can find that here as well, that help answer questions. The updates on the implementation of the employee retention credit and other information can be found on the coronavirus page of the IRS website. There's a link to that here as well. There's also a link to related items, including FS-2020-05, new employee retention credit, helps employers keep employee on the payroll.